One of the things that I had to learn was exactly what you're saying. It was this fallacy that you can't turn every trade into a winner. And in fact, it doesn't matter how many trades as a number you turn into a winner, but where your profits go. Because trading's all about profits. And this leads directly to what you're saying, that psychology and trade management is more important than anything else. How do you convince people of this? Because people approach trading from a technical point of view.
Right.
If I can pick the winner, I'll be cool.
Yes.
And you will be until the winner goes south.
Right. Well, first of all, I did find a picture of you on the first day on the trading floor, and I want to share that if I can.
I'm afraid of what's coming up because I had hair then.
Okay, there it
is. You still got your
as a matter of fact, you did have hair. I can see there's that's not actually.
Except for the glasses, that's not far off.
Okay. So I love your question. How do you convince a brand new entrant into the market, or even an experienced trader who has been enjoying some success over some time? How do you convince somebody that psychology and risk management are going to make more of a difference? And I would argue even that risk management is even more important than psychology, because I've known a lot of demented individuals who were able to make a profit in the market because they had a well-reasoned risk management plan. And I think that my first answer to that is that I try to entertain people long enough to communicate 100 times that those two things are going to make more of a difference. So I did 800 episodes of a radio show across the United States and or a podcast and thousands of YouTube videos and whatever else, largely for the purpose of entertaining people long enough to communicate that none of my success in the financial markets has been a result of having figured out the entry. And in fact, the greatest amount of money that I made, the bulk of all my trading profits, Joseph, and I haven't really talked about this until, I don't know, the last couple of years, came in the mid 2000s when I was buying the British pound, Japanese yen, sterling yen, Kiwi yen, Aussie yen in one account at FXCM and Refco, and then shorting it simultaneously and being perfectly hedged in an account at CMS Forex, which was based in New York and run by Russians or whoever else. Yeah. And they gave me an interest-free account. And so I built this magic carry trade, which was basically agnostic as to direction. It was basically gaming the system. And I made a huge amount of money and I got super lucky, but that's the bulk of all the money I ever made in Forex was due to the fact that I didn't care about the direction. I cared about money management and keeping my trades open. And I became like an asset manager. I wasn't like this analyst that was like, and if this squiggly line crosses that squiggly line, and a lot of people would listen to me talk or even read a book that I wrote about it. And they would just be like, that doesn't look like what I'm supposed to be learning, because you're supposed to be sizing up the market and choosing a direction. And then you're supposed to claim that you were right about the direction. And so I just kind of, forever after that, my focus has been on directionally agnostic systems that don't depend on me being smart enough to pick the direction that something is going to go next, because every time I think I've figured it out, I absolutely get it completely wrong.